Tesla hits an all-time high of just above $1,200. NerdWallet IPO this week. More gains expected in the market as major companies report on their Q3 earnings. Welcome to the Brass Bell Podcast. Let's get started with what happened in the market yesterday. With the Dow Jones closed yesterday at 35,913, which was a gain of 94 points, or about 0.26%. S&P 500 yesterday closed at 4,613, or a gain of 8.29 points. The Nasdaq closed at 15,595.92, which was a gain of 97 points, or 0.63%. The Russell 2000 closed yesterday at 2,358, which was a gain of 60 points, or about 2.65%. The top 10 trending stocks yesterday was, of course, Tesla, hitting their high of 1,208, which was up about $94.59, which is about an 8.49%. GameStop closed at 209 cents, up by $16.58, or about a 9.03%. Fuel Cell Energy was trending as well. Closed at $9.53, which was up $1.54, or about 19.2%. AMC closed at $37.07, which was up by $1.70, which was about up by 4.81%. SoFi Technologies closed at $22.62, which was up about $2.53, or about 12.59%. Ford, they closed at $17.95, which was up about 87 cents, which was a 5% gain. We also have a pharma company called ABVC Biopharma. It closed yesterday at $6.03, which is up by $3.49, which is about 137% gain. Chegg was trending as well, up, closed at $62.78, which is up about $3.32, or 5.59%. Plug Power closed at $41.65, was up by $3.38, and Vuzix Corporation closed at $14.14, up by $3.45, or 32.27%. So the stock of today, of course, we've got to talk about Tesla. Tesla again closed yesterday at $1,208.59, up $94, which is really exciting. Although today it does look like it's down, probably just a little bit of correction, a little less hype from the stock from yesterday, which is to be expected. Basic trend, stocks going up, will go up probably for a while. Everybody loves Tesla. Investors love Tesla. They love Elon Musk. And it's a great stock. I love it. It's great. Things that go up make me happy, It's great. But basic financials, they have a pretty large price to earnings ratio, about 360. And then they just hit a $1.2 trillion market cap, which is huge. I remember when that was about a week ago or so that they hit that, and man, that stock went through the roof, which is probably why it's at $1,200 yesterday. It is down today about 4%, was it? Actually, it's only down by 2% at opening bell. It looks like it has risen again, so expect it to climb right back up. At the time of the recording, it's about $1,185, but I expect that to continue to rise as more and more people get on the Tesla train. Okay, so today we're gonna spend a big chunk of time talking about NerdWallet. It is supposed to be IPOing. I don't know if that's the correct term, but the IPO goes live is suspected to be Thursday, so we'll just have to see how that goes. Also, happy election day. Let's see. So NerdWallet, the ticker is expected to be NRDS. What the company is NerdWallet is an online finance tool that assists users to make financial decisions. They offer educational material, credit card comparisons, mortgage lender comparisons, small to medium business products, investing information, student loan options, and more. So I think this company has a great market opportunity here. In their SEC filing, they talked about how 75% of Gen Zs are willing to take a personal finance course, which is just great for this kind of company. I think their marketing's pretty on point too. I've seen a couple of ads by watching YouTube and whatnot, and it just seems to be like a really good product. Let's see. They make their money by having users by using or signing up with NerdWallet's financial partners. They do have a couple of risks that I'd like to talk about. Like they're highly dependent on the credit card market, and then that could be kind of a problem as they're kind of tied to the overall economy. So I feel like once the stock goes live, it'll be very tied to the overall economy. Like if the economy is going good, we have good growth, the stock will be up. If we have some sort of political tension or economic problems with other countries and uncertainty begins to creep in the market, we're probably going to see that in this stock as it goes down. But that's just kind of my estimations about kind of the biggest problem or the biggest risk with this company is that they are extremely tied to the credit card market and how people react to the overall economy, whether things are good or whether things aren't. And they're highly dependent on whether people are opening new credit cards, whether they're using credit cards, whether they're looking for loans, and that kind of thing. So it's something to be aware of. They also said in their SEC filing that they do rely on Google and other search algorithms for new users to find them. Not a huge deal, not a huge risk. I'm not expecting Google to out and out remove NerdWallet from their search algorithm. I just don't think that's gonna happen. I mean, if Google does, that would be kind of suicide for them. They just start randomly removing stuff from their search algorithms. And then there is some competition in the market for this kind of product, like an online financial tool. There are some banks that offer online financial services. There's also another company called Truebill, off the top of my head, that kind of competes with NerdWallet. But as far as is the market extremely saturated? No, this isn't Allbirds. Allbirds is operating in an extremely saturated market where other companies have huge market share. NerdWallet is coming into a relatively new online space. Like I said, there is some competition, but it's not huge. There's a couple of companies that they're competing with. They're competing with their other banks directly that offer these kind of tools. But with these other banks, they're very biased towards their own towards their own products, and NerdWallet is not. They try to. It was very clear within the SEC filing that they really tried to put the customer first, which that's what everybody says. But more specifically, they're trying to make unbiased recommendations for what works best for the user. So whatever financial tool that the user is looking for, they're going to NerdWallet is going to give them unbiased tools and unbiased recommendations for what they need. So I think that's pretty great. So I'm not hugely concerned about the this massive competition because there's some, but it's not huge. And then another risk that's possible is the regulation of personal data. I mean, in the news, there's been more of a movement focused on using people's data to market and things like that. I know Facebook's come under fire many times for using personal data in ways that users are concerned of. And so the possible regulation will impact their business because they do use personal data to better market what financial tools that the user is looking for. So that is something to keep an eye on. Now they are hoping to make about $116.8 million from this IPO. And I think this is just it looks like a solid company. Now, I did look at their financials while reading the SEC filing, and they were making money in 2018 and 2019. 2020 rolled around, and they did have a loss of income, and it didn't really in the SEC filing it didn't explain why that was. Personally, it could be like a bunch of other things. Like I'm just speculating here, of course. It could be the fact that the pandemic hit and they had to incur losses because not a lot of people were looking to open a credit card in the pandemic. I know I wasn't. I don't know about you, but I remember that time very clearly. There was a lot of panic going on. It's like the last thing I wanted to do was like, let's incur some debt. So, but as far as, and also in I believe in the year 2020 they did acquire a couple of companies. So they were trying to expand, which is probably why they incurred more debt instead of making a profit. So I'm hopeful that they did, and they have made money in the past. So we'll definitely have to keep an eye on them and their earnings. I personally think that this might be a stock that I'm interested in. I will have to be doing research on their own website and like what kind of financial tools they offer. I might even sign up and see what exactly is going on so that I may be able to better figure out if this is a company that I want to invest in right at IPO. I know there's a lot of investors that want to wait and see, and I absolutely understand that. I'm usually that investor. I like to wait and see, but I'm actually really excited about this company. I've seen them. I've looked on their website. I would like to do a little bit more research before I definitely tell you guys that I'm in, but tomorrow I'll let you know if I'm in. And also, there is another IPO that I wanted to talk about, probably either tomorrow or Thursday. We'll just see what I have time for. It's called Expensify with the proposed ticker of EXFY. It was just announced on Robinhood today, so I'll just have to look at that and see if this is something that is interesting, something that will be good to invest in rather than IPO. But yeah, that is everything that I have for you today. If there's any kind of news breaking news, you be sure to let me know in the comments. If you're on YouTube, if you're on Spotify, go to my YouTube channel and comment. And that is everything. Thank you for tuning in to the Brass Bell Podcast. Again, my name has been David. Thank you so much for stopping by, and have a great day.